Hello everyone and welcome to This Week in Crypto, sponsored by the SwapNgo decentralized exchange. This week, welcome Lydia Elway to the team. We know you are going to love her as much as we do.
Thank you, Colin. It is an honor to be with the team. We have a great week and a lot of exciting news to go over. I can't wait for us to get started. Before we get going, however, I want to inform the viewers that they have an opportunity to earn SNG tokens just by watching the show.
Yes, Lydia, that is correct. There are two ways to win free SNG tokens actually. The first way would be to spot the SNG token when it appears on the screen during the show. It will appear 2 times. When spotted, the viewer simply needs to email us at the email address provided in the description with the exact locations the SNG token has appeared. If there are multiple correct emails, a lucky winner will be selected, with the lucky person receiving 500 SNG tokens. The second way for someone to win free SNG tokens would be to leave a comment down below. One lucky commenter selected at random will win 200 SNG tokens.
Wow, Colin, that sounds exciting. And good luck to everyone who watches the show this week. Let's get to the story, shall we? We had some interesting things happen in the world of crypto this week. We will start with the Bitcoin sell-off that occurred early in the week, and then talk about Jump Crypto. Jump may have been part of the reason why there was a Bitcoin sell-off, making some speculate that they could be getting out of the crypto business altogether. Of course, in Bitcoin fashion, Bitcoin had a strong rally to follow its sell-off.
Lydia, those are some great stories indeed. We will also start a new segment this week called Know Your Crypto. This segment is designed to educate people about all things crypto. This week we will go over the difference between meme and utility tokens. Then, we will cover the incredible news about Morgan Stanley. They just may have brought crypto into the mainstream this week. And last but not least, we will cover the XRP lawsuit. So, get some popcorn or your favorite snack, sit back, relax, and catch up on the week in crypto. So, we experienced a little bit of a sell-off in the market this past week. But, can this turn out to be a good thing? The cause of the sell-off was that the weekly jobs report came out and it was a bit weak. This report sent the bond market downward, along with the dollar. Bitcoin may have recovered if not for Amazon and Nvidia reporting large losses earlier in the day. Going back to how this could be a good thing for investors in the long run. As you can see, according to PBS, the Fed typically cuts the interest rates when the economy weakens. Lower rates result in lower costs to finance homes, cars, and credit cards. When people feel the relief of paying lower amounts in their everyday expenses, they tend to go to places like Robinhood or decentralized exchanges like SwapNgo and put their saved money into investments. To elaborate more on how last week's economic developments can be looked up on as good for the market in the long run, let's look in on Jerome Powell fielding a question from Gina Smiley from the New York Times.
Gina Smiley from the New York Times. Thanks for taking our questions. Markets pretty much entirely expect a rate cut in September at this stage. I wonder if you think that's a reasonable expectation, and if so, why not just make the move today?
Thank you. So on September, let me say this. We have made no decisions about future meetings, and that includes a September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate.
Did you catch that? Powell said that the economy is moving closer to the point where they can reduce the interest rates. Remember, the story explaining why Bitcoin slumped pointed toward a weakening jobs market. It is contended that the jobs market will lead to rate cuts, and rate cuts will explode the market. Is a weakening jobs market part of what Powell is looking at before reducing the rate? Take a look at his remarks just before fielding the question from Gina Smiley.
GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Housing sector, investment stalled in the second quarter after a strong rise in the first. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter, over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid.
It appears that Mr. Powell is giving data that indicates a weakening economy. Remember, when the economy weakens, rates tend to get cut. It seems odd that we have to root for the economy to weaken for the market to explode, but there you have it. If the economy stays the course, we will see the rate cuts. When and if that happens, according to PBS, the market will go up. That could lead to a stronger bull run very soon. Part of the sell-off this past week can be directly attributed to Jump Crypto. The trading firm transferred $277 million in ETH to exchanges of the past 10 days. According to Dr. Julian Hosp, co-founder of the DeFi platform Kate Group, the reason for Jump to sell off this amount of ETH is that they are being margin called or are exiting the crypto business due to their regulatory reasons stemming from their past dealings with Terra Luna. Adam Cochran, VP of Operations at SBT Partners, that Jump selling off into thin markets on a Sunday summer afternoon perfectly sums up why their crypto operation is such a mess. He further stated that for a shop that spun out so many smart builders in this space, the operation always seems to be so bleeped up. Back in June, the Commodity Futures Trading Commission (CTFC) began a probe into Jump. The probe is focused on the firm's trading and investment activities. Launched in 2021, Jump Crypto has faced a wormhole hack that cost $325 million and had big losses in the famous FTX collapse. Jump was also named in the SEC lawsuit against Terraform Labs, although they are not accused of wrongdoing in that case.
After the Friday sell-off of Bitcoin, due to the weakening jobs market in the US, and weak revenue reports by Amazon and Nvidia, this past weekend witnessed a global sell-off of crypto, stocks, and other equities worldwide. This was sparked by Japan raising its interest rates on borrowing and Jump Trading selling large amounts of ETH. The sell-off was followed Monday by a modest Bitcoin recovery, as it briefly hit $55,000 per coin. The Nasdaq also recovered a bit, closing at 3.6% down after hitting a low of the day of -6%. Are experts worried about this sudden crash of Bitcoin and other investments? That does not appear to be the case at all. The sell-off has been compared to the 2020 COVID sell-off of Bitcoin, which saw the digital currency shed 57% of its value in 6 days. We all know what happened to Bitcoin after that. According to Daniel Cheung of Syncrasy Capital, we can expect crypto to recover relatively quickly, and that this sell-off will ironically open the floodgates to a much greater bull market. Cheung attributes his opinion to the fact that most of the selling this past weekend was due to people being liquidated and panic selling. Hello everyone, do you know what time it is? It is time to know your crypto. Today, we will be covering the difference between meme tokens and utility tokens. According to Investopedia, a meme token, mistakenly referred to here as a coin, remember coins have their own independent blockchain, is a crypto that is often named after characters, people, animals, artwork, or whatever the project owner wants. They can be supported by online traders and are mostly intended for fun. They tend to be high-risk investments and may hold no intrinsic value. A great example of a meme token would be Dogecoin, seen here. The Doge token hit an all-time high on May 8, 2021 with a price of 68 cents per token. Utility tokens, on the other hand, are blockchain-based tokens that have a specific use and offer utility. They can be used for gas fees that cover the cost of trading on a blockchain, such as the Ethereum token seen here. They can also come in the form of the SNG token that fuels the SwapNgo decentralized exchange. Ethereum hit its all-time high of $4,891 in November of 2021. So, There you have it. Now you know the difference between a meme token and a utility token.
The moment many were waiting for with Bitcoin happened this past week. We all know that Bitcoin and Ethereum ETFs were approved this year by the SEC and that BlackRock and Fidelity, to name only a few large investment firms, have been listing them. The inflows of massive cash, buying them up, have been happening, but has the common investor been able to get involved? Well, they can now. It was reported on August 7th that Morgan Stanley is now allowing their 15,000 wealth advisors to put BlackRock and Fidelity products in front of clients. According to Pantera Capital's Cosmo Jung, the shot of the starting gun, for the bull run, is largely flying under the radar. As Morgan Stanley becomes the first of the large banks to have their wealth advisors sell them to clients, things will look very good for crypto. This potentially opens up trillions of dollars for the crypto market. The Crypto News calls this the last taboo to adoption. According to the Crypto News, one expert noted that this decision could drive more widespread adoption of Bitcoin in the coming months. CNBC also said that Morgan Stanley giving their wealth advisors the green light to allocate to Bitcoin ETFs makes it just a matter of time before this gains traction. An important part of this story is that only people with a net worth of $1.5 million and a high-risk tolerance can get in on the action. What does this mean for the common person? Does this mean they won't invest in Bitcoin? No, it means that they will find other ways to invest via other channels. The common person will invest using exchanges like SwapNgo, PancakeSwap, or Uniswap to get in on the action. Let's listen in on what Austin Hilton, one of the most respected crypto influencers in the industry, had to say on this subject.
Inflows for BlackRock, just their the Bitcoin ETF is 24% in 2024. 24% of all of the money flowing into BlackRock, 24% has come in because of the BlackRock Bitcoin ETF. To give you some perspective, BlackRock has over 450 ETFs, and 24% of their total inflows, the money coming in for 2024 has come into because of the BlackRock Bitcoin ETF. Again, why is that relevant? Here's what it comes down to. Institutional wave, institutional money is coming.
Remember, Austin stated this a few months ago back in June of 2024. Was he correct? Well, so far he is spot on. What about people investing on their own, controlling their own trades and acquiring crypto on their own without the aid of Morgan Stanley or other investment houses?
For the major traditional financial institutions out there to start going to their clients and saying, you know what, you need to put 1%, 2%, 3% of your total portfolio into crypto, things of that nature. Okay. It's coming, guys. And when that starts to happen, then there will be millions and millions of people who go, you know what, I don't have to necessarily go buy a BlackRock Bitcoin ETF or Fidelity Bitcoin ETF. I'll go buy the asset, hold it myself. Will those people be those people that will take adoption under their own control and by themselves? All of that is coming. It's not here yet. When does it start? September, October. That's it. You got a couple of months.
So there you have it. There is a high likelihood that people will be buying on their own without the big firms. The big investment firms will be making crypto mainstream, but the average person is going to be using the Robinhoods, SwapNgos, and other platforms to get their crypto. If you have not done so already, please make sure to like and subscribe to Austin Hilton's YouTube channel. He definitely is one of the best in the business and deserves our support.
Earlier this week, it was reported that XRP could celebrate a win in their case against the SEC. They did have the fine the SEC had asked for lowered from $2 billion to $125 million. That is a small fraction of what the SEC has sought, and XRP was found to not be a security for secondary sales. Ripple views this judgment as a win, but once again it seems that the SEC is not done. Although XRP sales exploded 20% in 24 hours, it seems that the SEC is not done yet. The SEC just might challenge the July 2023 ruling that stated XRP secondary sales as non-securities. This Week in Crypto will be keeping an eye on this story and keep you updated with any new developments. Well, there you have it. The major happenings from the world of crypto for the week ending August 9th, 2024.
Have a wonderful week, and we will catch you next time. Until then, please remember that investing is not a sprint. It is a marathon with the occasional pitfalls. Please make sure to do your own due diligence.